Hi, everybody. Welcome back to our podcast, The Ins and Outs of Selling Our Business. Today, we're going to continue our conversation with the Osage team, is how our team works with your team to a successful transaction. Takes a lot of work, a lot of energy, and I'm very happy to welcome back today Jim Young, Will Wilcoxson, and Philip D. So, guys, last time we talked about the pieces of the puzzle. And the perception when you're selling your business is like it's the end game, right? From business owners. But it's not. I mean, there's multiple ways of selling your company.
It doesn't have to be.
Or it doesn't have to be.
Right,
exactly.
right.
I mean, you can be in a position where you're, but where you can sell a piece. Typically majority, but you can retain some of it, but you can de-risk yourself, de-lever yourself. So that you can take some chips off the table, as we call, and maybe get what they call a second bite of the apple, so that you're in a position where you, in this case, could be an opportunity. And Jim, we can talk about a deal where it's not just an end game, right? There's multiple things that we can be doing that the client doesn't think about until they engage us.
Yeah, let me touch upon that a little bit, Keith, and add on to what Will was saying. I mean, this is a fairly emotional decision for a business owner to sell their business. It's their baby. They've been in business for decades. They've even inherited from a father or a grandparent. So this is a serious decision. And many times we find that they think they can do it themselves, right? And so they may not engage with a professional advisor. In order to save time, they perhaps have been offered a certain value for their business from a buyer, and they don't know any better, but they think it's a good deal, and so they can save perhaps on the expense of hiring certain professional advisors, do it themselves, and do this very quickly. And the actual opposite ends up happening.
Right,
it's a disaster. They don't necessarily know who they're dealing with. And like I mentioned, the transaction is quite complex, and they're not familiar with the process. And what ends up happening is a busted deal, and they do eventually engage us, and we do it right, ideally. And one of the things we bring to the table is, while they're quite emotionally invested, we're experts in the process, and we put them in a better light. If there's a difficult conversation to be had, we have it, and so we become the bad guys if need be, and we preserve the relationship with those business owners to the buyer and their future roles together.
And one buyer is really not a buyer, because if I call up an owner and I say, I'd like to buy your business, I'm going to give you $10 million. I'm driving the pace. I'm driving the interactions. Frequently when somebody raises their hand and says, I want to buy your business, they'll drive it along their timeline, and they're, watching to see, how are you doing during that period? Are you making your projections? Are you closing new deals? And if they think that it isn't happening, they may push on the price, or they may delay. And in the end, what we bring are choices, because if you have 5 people bidding and somebody says, I want to press the pause button, we're there to say, no, you're going to miss out.
Yeah,
We've got other buyers.
Well, I mean, we had a transaction a couple of years ago when I first started with Osage. We went to market. Phil pressed that button. Here we go.
Yeah,
right?
Here we go.
And 27 bids came through. Right? Now, some of those bids, our client, the seller, had received directly themselves before they engaged Osage. They had a couple.
right.
We brought 27. But what was interesting was the valuation difference between them. Coincidentally, the low bid happened to be 27 million, and the high bid happened to be 77 million. Now,
How can you possibly have a difference like that, right? That's the question.
Yeah, what's crazy, I mean, all these buyers are sophisticated investors. They know what they're doing. They receive the same exact set of information that we send along in the sim that Jen so wonderfully produces for us, right? And they made decisions that the value was triple the difference, right? And so if they didn't engage us in an auction process, which one of those bids would they have received on their own?
And the reason why he came to us was because he was approached by one of these bidders, and they actually submitted a bid, and they were, I think, like in 6th or 7th or 8th place, right? They were $20 million less than the winning bidder. And by the way, the winning bidder was not the highest price. Because at the end of the day, and we talk about this a lot, Phil, it's got to be right. It's got to feel right. It's got to fit. right? And you can have the best offer in the world, but if the client, again, this is an emotional decision, if they don't feel good about it, they will be hesitant to move forward because it's 20, 30, 40 years of their lives, and all of a sudden you're going to walk away with a bad taste in your mouth. We don't want that, right? So they take that second bid. And how many times have we been involved with transactions where they don't take the highest bid? Several.
Yeah, I feel like most of the transactions I've been involved with over the past few years, it's been the second or third bid. That being said, bids that are a lot lower that might be a good fit, aren't going to work. But if there's a bid that's just slightly below or a couple $1 million below, the top bid, it's enticing to the business owner to, pick that bidder due to, the fact that it would be better for the employees, it'd be better for his transition period, et cetera.
Yeah, chemistry is huge. I mean, you build a company for 10, 20, 30 years. You've got employees that you want to see in good hands. You've got customers that you want to see in good hands. And just handing it off to the highest bidder really doesn't work for most people. They want to make sure that in the transition, that sense of family is preserved.
Yep.
Yeah, I mean, that's part of our process, right? We start out asking for, we provide that complementary valuation modeling. We get these bids delivered to us. So you have all these financial metrics, but then we invite them to the table, right? The higher bidders, the one that look more attractive to the seller.
Yeah, for management presentations.
Management presentations, that's part of the process. And we meet them, and so does our client. They meet them firsthand and see what they like and dislike. And that's where that decision comes, where maybe it's not the top bidder. This company over here is a better fit for X, Y reasons.
Yeah, I was in a meeting actually before you guys joined us when I first started this, and we had management meetings, and there was 3 owners, right? And then there was this team came in from they put a very compelling offer, and we had the presentation, the conference, and the potential buyer got up and left, and a street partner, and one of the guys who literally has not said anything. It's like our 5th presentation. He got up and said, "I ain't selling my company to those people." I said, "Okay, time to move on." But that's it. That's what happens. Right? It's not in our control. Our control is to bring opportunity, bring multiple choices, right? So you can find the right bid. It brings the total value. And that value is not just the price.
Yeah, I before joining Osage, I had a client that was very Midwest in their demeanor, just very friendly, outgoing, just low key. And they were interested in finding a company to acquire that would provide them with some new product lines. And most of those companies happen to be Wall Street companies. So you take this Wall Street culture and this Midwest culture, and you're not going to put them together. And you could see in the meetings, you could see in the presentations that there were just 2 styles and 2 cultures that weren't going to go together.
Mm-hmm. Yeah, and just kind of go back to that company that we sold. First off, they didn't take the highest bid. He didn't like the guy. And that goes way back. You know each other through the industry for years and years. And at the end of the day, he just couldn't pull the trigger with them. And also, what's interesting is that, value is different for different buyers. Mm-hmm. And it's not like they're trying to be opportunistic or steal the company, 27 million versus 77. The business that came in at that 27, 28, $9 million number, right? They were named by Inc. magazine of one of the top 50 family-friendly private equity firms in the country, several years in a row. Doesn't make them a bad buyer. It's just the wrong buyer for this business, right? They have evaluation metrics they use. You may have had it when on the buy side. This is how I bid, and if it falls on that level, I'm happy to move forward. They were not the right buyer, even though they had a good team and they have a good track record. The way they value business was X, Y, and Z versus A, B, and C.
Sure. I mean, there's a lot of elements to evaluation, right? You can think of the size of the revenue growth, size of EBITDA growth. Those are obvious, right? Financial metrics. But there's a few others that our clients may not be as aware of that's important. They range to employee retention and attrition. Those are key factors. Can you keep the factory open? How motivated is the workforce? Succession plan. Is the owner retiring immediately or willing to stay on for a couple of years? So they have to get that mindset that these are other attributes that buyers are looking at. Level of capital expenditures, right? So there's a few others that are out there that are less obvious that we try to bring to the table as well.
There are a lot of components to value, and sometimes you have a buyer where everything is right. It's a new geography that they want to be in. It's a product line that complements their own. They're unique clients. There's a great management team, all different things. So one buyer may have the ability to pay a lot more because it checks more of the boxes than somebody who's maybe a financial buyer who says, this will help me grow. So,
yeah, I think, it's, we were all committed to getting those bids, right? We're all, we put together a comprehensive memorandum. We go to market, 3,000 equity funds, maybe 200 to 500 strategic buyers worldwide. We have these presentations. We have the Q&A session. They submit questions. We get the bids in. We sit, and then all of a sudden we have the management presentations, and we sign a letter of intent through negotiation. Right, we're involved in every step, and then we have the LOI. Right, it's finally signed, and then all of a sudden the bulb goes up in our client's head. This is real. I'm actually doing this. And so I think one of the things that we bring to the table, all of us in this room is that, and others, is that, we stay heavily involved, probably more than the front half of the process. The back half is more important, that due diligence period. And I think we all can talk about a little bit about, how that communication works, how we set ourselves up to be in the middle of it in every conversation between the buyer and the seller to make sure our clients are properly being served, right?
Yeah, I think you like to say this is when the fun begins.
Right, the fun. This is when the work really begins. The fun begins.
The fun.
I call it my 9 o'clock Friday night phone call. Right. Every deal I've been involved in since I started this company, in 2001. 9 o'clock. Client, what is this again? What does this mean? How's this work? And you know what? You got to return the phone call. Right. It's the phone, not an email. You pick up the phone and you talk to your client, and if there's concerns, you go back to the other side, even if you're one day before closing, right? Remind me again how you're going to handle this because my client didn't hear it from you. Well, we talked about it. I said, no, you did. And literally that was the answer I gave. I said, you may have thought you answered the question, but I just got a phone call. You didn't answer the question, right? You've been in the room when I get those calls at night, or in the morning, whatever. And I'm walking around the office and say, okay, let's talk through it. Let's talk through it. You need to get to the meat of the issue.
Yeah, this gig is 24/7.
Right.
Maybe when we're not on the golf course.
Right. Well, yeah, exactly.
Otherwise,
put the club. It's hard to put those phones on do not disturb in the golf cart, right? Because you're always looking.
Yeah, I found, recently, at least in the last few transactions, the more stress our clients are having, the harder it is to come to a conclusion and a decision, that works for everybody. And I think, if we're successful in, getting our client to, calm down a little bit, so to speak, and then kind of have a peaceful conversation with him and then turn it over and, reach out to the buyer and, let him know the real concerns our clients are having, usually we're able to overcome those issues. So.
And there's the phenomenon of deal fatigue as well. As time goes on,
good point.
People get a little bit fatigued in the process, and we can stay in the middle and make sure that emotions don't flare up between a buyer and seller. Whereas a lot of times when a buyer goes one-on-one with a seller and a buyer go one-on-one, they're having these conversations every day, and that relationship is starting to degrade. And we can keep the relationship such that when they finally make the deal happen, they're not at each other's throats, and we can play the bad guy.
Yeah, and I think deal fatigue goes both ways because we've invested 1,500, 2,000 hours per deal between collectively 4 people, if not more, in getting things done. And so it's really important to lean on each other at that last, at the 1 yard line, not to make, it's like, don't make quick statements. You got to say, let me get back to you, and then call, hey, what do you think about this? How are we going to handle this? What's the best way to approach this? And then you pick up the phone and you call the client back. Don't just don't react,
yes.
Right? Don't react. Take it in, listen, process, come up with a solution or options. I call them options a lot. Well, let's think about this. Let's think about that, right? And we had a deal where we lost the client, their number one customer, who was 70% of business, decided to put a $3 million order on hold, like a week before closing, right? Or a month before, and the buyer, of course, is going to give pause, but we found a way around it that worked for both parties.
Mm-hmm.
Versus saying, "Oh, this is over." No, we find solutions. That's our job, is to find solutions that work for our clients, and get the buyer to buy into them, and that it's a win-win for everybody.
Right.
So
We had a transaction where our client had a major customer that was a potential buyer. They were really the right buyer. And that customer who had that commercial relationship with our client knew it and was leveraging that. Leveraged it to an extent where they offered what I'll say is an unfair purchase price.
50% of market.
Yeah, 50%, exactly. And our client did not think that they had options beyond selling directly to this relationship with their customer. And we came into the process. We took the emotion out of it. We added time to the process for the other party to think about the true value of the business. And eventually they did come back, and we represented our client quite well, as the purchase price doubled.
Yeah, we got market value for the company. I mean, I always look at it, you're at the 1 yard line, putting all these pieces together, right? You're at the 1 yard line, and everybody's got to push together as a team, row the same way to get over the finish line. And you can't do it on your own as a business owner. You need to be represented, in our opinion, because the emotions are too high, and you get to that 1 yard line, and like you said, deal fatigue, concerns, what's this all mean? If you haven't been through it, it could, your emotional reaction could cause the buyer to have pause. Because I need you post-closing. You can't walk out the door on day 2 or day 1, right? So it takes a full team on the client side and our side to kind of get over that finish line to a successful transaction.
Right.
I mean, and look, I can't do it on my own. I mean, I used to do it on my own years ago, and I recognize that I don't want to be the shoemaker's daughter. I need to build a team around me that has a good skill set and diverse skill set that could make this company successful. So I'm very fortunate to have you guys with us, and just want to see if you guys have any final thoughts about your experiences today with Osage, and we can wrap things up.
Well, I've been constantly impressed with the fact that everybody really invests a lot in getting to know the clients, getting to know their business, because at the end of the day, not too many buyers call and say, what was this number, or what was this, margin, or whatever it was. It tends to revolve around things like, what does the buyer want? What do they value? What do they want to do after this transaction? And being able to answer those questions, I think really sets us apart from other banks. Other banks have a lot of the facts, they have a lot of the market research, but they don't really get into, what is it that the owner really wants to do after they sell, or do they want to keep working for another year or two? And we really go to make sure that we put a lot of effort in making sure that our owners get what it is that they want. Sometimes it's price, sometimes it's lifestyle, sometimes they want the business to stay in one place, and a lot of times they take those considerations above price.
Yeah, to piggyback off of what Will was saying, I think one misconception, a lot of our clients and, some of the buyers have is, the client thinks, well, when they come to us, they're thinking about retiring, but then a lot of times buyers ask me, what's the plan for the owner? And the owner, initially wants to retire, but, there needs to be some type of transition or succession to maintain the relationships of the customers and employee retention. And I think, a lot of our clients, think they're going to have to end up working, 60 hours a week like they already were doing before the transaction. But that being said, I think a lot of the buyers that I've had experience with and that I talk to don't really care, how often you're actually in the office. As long as you have, a phone on you, you can be halfway across the globe. And as long as you're there to maintain a customer relationship for an hour here and there, I think generally, the buyers are pretty happy with, that experience and staying on.
Right. It's just about, misconception or perceived notion that I have to, I'm going to be there chained to my desk
exactly
24/7 after I sell. And that's not the case. Right. So any final thoughts from you, Jim, on?
I guess I just want to conclude by thanking you for having us again.
Thank you.
I'd like to say that It's been an honor to be part of the Osage team. I mean, you guys are high integrity people, and I really appreciate being associated with you. It's been a great run, and look forward to continuing it.
I do as well.
Well, I thank everybody. I mean, you guys are helping me complete the puzzle for Osage. I mean, we're continuing to grow. We have a lot of exciting things coming up in 24, and couldn't do it without the dedication and support of everybody in this room and people who aren't with us today. So I'd like to thank everybody for being here today. To our podcast, The Ins and Outs of Selling a Business. If you enjoyed today's episode, you can always go to our YouTube channel and subscribe to it. Again, my name's Kdee. I'm president of Osage Advisors. Osage Advisors is an investment bank working with family close-held businesses looking to sell, typically $5 million in revenue and up. To learn more about our firm, you can visit our website at osageadvisors.com. You can email me at kdee@osageadvisors.com or pick up the phone and call anybody in this room at 860-767-3273. Thanks again for being with us, and have a great day.